So let's slide the balance sheet in here so we can look at this. With the balance sheet, this is the one section that's probably the most confusing. I always start at the bottom of the balance sheet and complete the owner's equity first. This particular calculation here can be confusing, but I'm just going to walk you through how to do it. And then as we play the game and as you play the game in practice, you'll start to understand what it actually means from a financial standpoint. So the owner's equity in capital is typically an investment in the company. It's money that the owner has put into the company, and that carries over from month to month unless you have a situation where the company pays out some money to the owner. So you're going to continue the owner's equity over. Revenue is equal to what your income is, and so if you go back to the main game board, we had 11.7 in income, and so we're going to put 11.7 here. And then your expenses are tied to what your expenses were off of the profit and loss, so it's 91.74. So we're going to put 91.74 right there. See how quick and easy that was to complete that? Now, you'll notice that this 55.26 is already here, which is really odd because how did they know that that number was going to be there? Well, it's really interesting because it is actually a sum of your revenue, your expenses, and your retained earnings. So over time, so when a business starts, they oftentimes will start with negative retained earnings, and a company that loses money month after month will also have negative retained earnings. And you add that to the revenue and expenses every single month, and that gives you your new or updated retained earnings. And so with the numbers that we have now, we can actually fill in this box right here. And the way that we would do that is we add up these numbers right here, and I should have put the expenses in brackets because it's negative. Whenever you see a number in brackets like these ones are, that means it's a negative number or a loss. And so what we're going to do is we're going to take that 11.7 and we're going to subtract the 91.74, and then we're also going to subtract the negative existing retained earnings, which is 55.216. And so we end up with a new negative retained earnings of 52.690. Okay, and so that's our new retained earnings. And then the way this number, this 55.26 came from was the same calculation. Again, let me just circle these for you. It's these three numbers right here. You add those up, remembering whether they're positive or negative, and that ends up equaling what your retained earnings are for the next month. So if we take 10,700 and we subtract our expenses of 8,004, and then we subtract the retained earnings that were existing, that's 57,912, then we end up with a negative retained earnings of 55,216. You see where that came from? And so that's how come now we know that our retained earnings from this month are 52,690, and so we've gone ahead and entered that in there. So as far as figuring out the total owner's equity, or this bottom blue line, you take your $80,000 of owner's capital and you add that to the 11,700 worth of income. You subtract the expenses, 91.74, and you subtract the retained earnings, and that's 55,216, and you end up with your owner's equity of 27,310. Okay, so that's the hardest part of the balance sheet. If you go up here to long-term loans, we're not taking any. If your company goes into the negative, then you may be forced to take a long-term loan, but for right now you don't have to. Vehicle loans, remember I told you to make sure you copy down the vehicle value, which I've noted right there. That came from our region indicator on here, and remember we picked Baltimore, and the vehicle loan is $29,250. So that's where that number came from, and so we're going to put that here, and that's under vehicle loan. So $29,250. So what that means is we borrowed $29,250 for a vehicle. $29,250 is our total liabilities. Okay, next we're going to move up to cash in the bank, and the way you figure out cash in the bank is you go to the main game sheet and you take your bottom line value, how much money you made. That was 25.26 positive. So we're going to put that in here, 25.26 plus our previous month's cash at the bank was 4784, and so that's 7310. I've already written it right there. Your carried inventory is 8,000, which, by the way, it's always positive to see your cash at the bank going up, especially if you're a small business. Let's see, so your carried inventory is 8,000. That's not going to change. That'll only change if you get a card that tells you that it's going to change. The same with equipment and real estate. There was no effect to that this month, so we're going to continue that at 12,000. So the vehicles is interesting because remember we listed the vehicle loan as a liability, so it's money that we owe. It's kind of a negative thing. But we've also got a vehicle that has value. And so the value of that vehicle is equal to the loan amount. It's $29,250 minus, remember this up here, our vehicle payment, minus that $450 first payment that we made. So the current value of that vehicle is $28,800. Now, there's a whole bunch of other, for accounting people, there's a whole bunch of other things to consider with regards to vehicles and how you depreciate them and stuff like that. But for the purposes of the game, we depreciate the value of the vehicle equal to the value of the payment or the amount of the payment that we make every single month. And so now what we can do is we can add up all these assets to see what our total assets are for the month. So we have 7310 at the bank, plus we have 8,000 in carried inventory. We have 12,000 in either real estate or equipment, and we have a vehicle worth 28,800. And so our total assets are 56,110. And we just completed 1 month in the game and 1 month in business. And it actually looks really good because we made $2,526 in our first month in business. We're set to be positive because we know that next month we're going to draw probably another sales card. Maybe we'll get a company card, but even if we don't, we know we've got 6 additional contracts in the basket because of that sales card that we got in April. So that's going to be a good thing. And we've got positive cash at the bank. We increased our cash, so we're up to $7,310. We decreased our retained earnings, which is good news. And we're looking good overall.